Palantir stock. Palantir stock is the main subject of today's video. Palantir won a big contract today. Want to go ahead and react to this one, kind of give my opinions and perspectives. Obviously, Palantir going over $26 a share here today. So another big move up for Palantir stock. So we'll speak about that. I want to share my opinions, perspectives there. Then I want to go ahead and get into this one. Wall Street Journal's Tim Higgins. People want a Tesla. They don't necessarily want an EV. Okay, so this should be an interesting one to react to there. And I believe Tesla stock did end up going down again here today. I think Tesla's down about 30%. So far, year to date, it has been absolutely brutal start to the year for Tesla stock. Shareholders like myself, I can tell you that much. Woo-wee. And then we're going to go ahead and get into Powell. Jerome Powell spoke today, and we're going to react to some of this, what I think is very important to kind of understand where the market's headed and those sorts of things. All I ask in return, smash a like and make sure you subscribe to this channel. We are now at a new all-time high subscribers, over 41,000 subscribers on the channel now at this point in time, folks. I appreciate each and every one of you. Also, I got a brand new free workshop for you guys, absolutely free to access that. Pin comment down there. How much money do you need to retire, quit your job, focus on investing full-time? All those good subjects are covered in that workshop there. That is pin comment. All right, guys, let's get into this.
Profile win for Palantir. The defense tech startup awarded the U.S. Army's Titan program. This was picked over an industry stalwart, RTX, marking the first time a software company becomes a prime contractor of a big hardware program. Titan, or Tactical Intelligence Targeting Access Node. This is a mobile ground station that accesses data from terrestrial and space sensors. It uses AI to help provide more precise targeting for long-range precision strikes and battlefield planning. Palantir, as Palantir puts it, it's deploying the Army's, quote, first AI-defined vehicle. First contract, $178 million to develop and deliver 10 prototypes, working with subcontractors that include Northrop Grumman, L3 Harris, and startup Anduril Industries. It's not the biggest ticket program, but it is significant. The engineering and manufacturing development phase estimated to be about $400 million. Now, this is big for Palantir, though. This represents the company's fourth largest contract by annual revenue run rate. That's per a recent William Blair note. And it boosts the government portfolio as growth in Palantir's U.S. commercial business has been surging. Also reflects the role that...
But do you know what's even bigger than all this? Do you know what's even bigger than all this? I'll tell you exactly what it is, okay? The branding this does for Palantir. This is freaking cool stuff. And I mean, you know, this is the sort of stuff that when you go to talk to a boring company, you know, some, you know, let's call it a $40 billion company, and you tell them the type of stuff you're working on with the Army, and you tell them how advanced some of these projects are you're working on and these contracts you have with them. I mean, my gosh, like, it's just like, it's such a halo around you. And if you can do that for the U.S. Army in these, you know, unbelievable situations that you couldn't even imagine, what can you do for, you know, the big food company that sells to all the super centers and all the Walmarts and the food stores and things like that? Like, what can you do for that company? I mean, it's like, that looks like easy stuff compared to what you're doing over there. So I think even above the contract dollar value, and potentially the cash flow this can pour off to Palantir, I think it's the branding for something this freaking cool.
I will and already increasingly is playing on the battlefield. And as you can see right there, shares of Palantir moving higher right now in the pre-market, up about 3%.
All right, for the layperson, dropping an AI
I need to set that to record.
Box like this on the battlefield means what? You can see where the enemy's moving, or it can predict where the enemy's going to move?
Yeah, so all of that. So it's this whole idea of long-range precision targeting data. So basically being able to pull data from space sensors and terrestrial, air, land, take all that data, basically boil it down, run it through AI models, essentially, I'm assuming, and then be able to take that and have a more precise locator for whatever it is you're looking on the battlefield that's not within plain sight, that's further away.
Big deal.
Yeah.
Or just use a nuke and get rid of everything in the area.
But don't you want the most precise information and targeting data before?
I'm cynical about how scary everything is, and hypersonic weapons that I guess we don't have, and you know, Putin's talking about a nuke on a satellite, and it just
it is a very from that perspective that you can have a more surgical.
You need to have. We need to cover all our bases, both the surgical and I guess we need to.
Well, and this is one of those arguments against regulating AI, right? That like you can talk about it, you can talk about societal impacts and what this means for the country domestically, but what happens when you do have adversaries like China, like Russia, particularly China, harnessing all this data, not necessarily applying the same ethics to the way they're developing this and weaponizing that software.
The last thing we need to do is use AI for warfare, would be the other argument. One's offensive, one's defensive, I guess.
Yeah, and I would say that the U.S. military and the Pentagon have been very deliberate in terms of how they have been rolling out the guidelines and the ethics around where this gets implemented, how it gets implemented, and what that looks like, for example. And Greg Hayes from RTX has talked about this, and other defense contractors, the fact that there's always some sort of human decision within, a kill chain process. It's not just the AI making all the decisions when lives are at stake.
AI with the Iron Dome or with the Patriot that probably make it even better than it is right now, I guess. So, like anything, it can be used for good or evil, right?
Exactly.
It's not wanting to fall behind in the arms race, though.
Right.
That's part of that.
Who's reading this? I think is
later today. We should point out on closing bell.
So, if you know my view, the most important, one of the most important things ever in the creation of mankind is actually the nuke. I truly believe that to my core. That's one of the most important developments in human history, and it's the only reason that we have not had a world war since the 1940s. The only reason. I could tell you we would have had so many more. We would have had World War III already, and World War IV, and World War V. But because of the nuke, no one can do anything nowadays. That's where the big stick comes in. Everybody's scared to do everything. The United States is not going to do anything against Russia. Russia's not going to do anything against the United States. China's not going to do anything. No big countries nowadays are going to do anything against other big countries because of the fear of the nuke. And so that's when you get into AI, right? And if you have the best AI systems, you're never going to try anything. And so you can look at it as, yeah, it's dangerous because, man, what if something happens, right? But it never gets to that point because people know, oh, it's not worth the risk, man. And it's not worth the risk. It's like the big, muscle man at the bar. It's kind of like, let's not mess with him, right? All right, next one up here, Tesla Myesla.
Far this year, down 27%. There's been a series of issues from stock analysts, stock downgrades, a dip of shipments in China, and the latest, an arson attack on Tesla's plant in Berlin. Join us now is Tim Higgins, a Wall Street Journal reporter and a CNBC contributor.
Arson attack. Of course.
Tim, it's good to
always
see you. It's
something,
not like,
man. The flipping flapjack and hurricane.
We hear great things about the entire EV market every day either, Tim.
Yeah, absolutely. It's a tough place to be playing. But for Tesla, it's all they're playing with, right? And the underlying story for Tesla has been about incredible, rapid growth over the last few years. And now Elon and team are suggesting that's going to be much slower this year. And all of these signs in the last few weeks and months are really kind of making it even more worrisome just how slow that growth is going to be. One of the remarkable things about Tesla is if you look over the last 3 years, for example, the first quarter has shown growth that's been better than the fourth quarter, which is really rather remarkable if you think about it, because who wants to go buy a new car in winter and kick the tires, right? But that is just kind of underscores how much growth there's been there. And now there's real concern that maybe this quarter won't be as good as last quarter. And that's worrisome to some people.
Do you think eventually that some of the mandates that we've had from the Biden administration, do they get pushed back? And does that matter to Tesla? Is Tesla dependent on I mean, I know that certainly subsidies help, but on the mandates to get to a certain place by 2030, if that gets pushed back, would that hurt Tesla?
Well, the tax breaks that have been passed certainly help make these cars more affordable for Tesla. Now we've seen them expanded, so Tesla has them again. Without a doubt, that helps as Elon fights to get every penny of cost as he can out of those vehicles. But he has argued in the past that he's not dependent upon these sorts of things, that his goal at Tesla is to make a vehicle that is cooler, is better than a gas car, and that will be what appeals to people and drives kind of that EV transition. And in a lot of ways, that has been true for Tesla. It's the other competitors who really seem to be struggling to make an offering that can compete with Tesla. People want a Tesla. Maybe they don't necessarily want an EV.
Does the general malaise...
No, what he just said there is 100% true. People don't want an EV, they want a Tesla. It's accurate. I mean, you look at everybody else's numbers. It's not like Tesla's the only one making EVs nowadays. It's not like it was 5-10 years ago. Now, pretty much every single auto manufacturer out there has an EV in the market, and they don't sell. And even the companies that are, producing just solely focused on EVs, the Rivians and the Lucids, their numbers are absolutely horrible. And I'm not just talking about bottom line numbers. Those numbers are going to be horrible. I'm talking top line. You hear the guidance for deliveries expected for Lucid in 2024 and Rivian, it's horrible. It's clear as day people want a Tesla specific, right? They don't want necessarily an EV specific. And so, it just shows that Tesla has a superior product in the market that people want. And at the end of the day, they'll it's no different than the smartphone. It wasn't like people just wanted a smartphone in general. They wanted an iPhone, right? And, obviously Apple captured insane market share in the United States of America, for instance, right?
It's been pretty staggering to watch how quickly things can change with the whole perception of EVs. But the infrastructure build out, that's going to happen no matter what. I mean, if people sour a little bit, the demand is not there for EVs, they're still going to build the charging stations, right?
Right. We've seen kind of huge investments by the automakers other than Tesla, and they're kind of pulling back some of the speed of that. But we're also seeing the investment go into chargers. The charging network, it perhaps is one of the most important thing to kind of pushing forward that adoption. When you talk to consumers like I do, you hear that concern about, hey, where am I going to charge this thing on my road trip to see grandma? Even though for most people, charging at home is probably the best route.
This man does look like he would go on a road trip to see his grandma. He looks very nice.
Lives at a place where they can charge. So this is kind of one of the big kind of chicken or egg issues that we see out there.
You probably saw Andrew's DealBook interview where I don't think Elon really worries about about what people think of him. Certainly doesn't worry about what Bob Iger thinks of him. I remember you probably saw that. So what can you tell me? It was a New York Times report. What do you know about Elon Musk meeting at Mar-a-Lago with former President Trump?
So it'd be a natural partnership. We've seen the evolution of Elon Musk since taking over Twitter, since kind of this idea that he's kind of against the idea of the woke mind virus, that idea of being over politically correct, over kind of liberal leaning. And you saw really last May or so kind of his kind of moving more and more into politics, almost trying to be a ringmaster, if you will, in that kind of road to the White House, whether it was kind of welcoming the DeSantis campaign into the big fight, or hosting other candidates on his platform. As we've seen the field narrow to Trump, if you're like Elon Musk, and clearly he's voiced opposition to Biden, Trump would be the pragmatic choice at this point. And the question would be, what can they both get out of it for each other, right? They're both very transactional. Elon has a lot of business with the government, and Trump, could use probably some allies in that fight on the social media world, where Elon can kind of amplify with his Echoverse all of these kind of thoughts and political messages.
And they both have been known to tweet first and ask questions later, too, I think.
Absolutely. I mean, here are two men who have really mastered the art of the tweet, right? I mean, embracing populism in a way that is remarkable.
Some wacky, both of them.
Yeah, I don't think what they're talking about there is going to happen. I think they're kind of talking about almost like a partnership, almost like a full-blown Elon Musk endorsement of T-Man. I don't know if I necessarily see that happening, although, definitely, if you kind of read through Musk's tweets, he leans toward one side. That's pretty obvious, but I don't know if he really wants to go there. I don't think Elon really wants to wrap his brand in anyone else's brand. I'll put it like that. It doesn't matter who that person is, whether they're a president or a former president or anything like that. I don't think Elon ever wants to attach his personal brand too much to somebody else's brand, even if that other person has a potential successful brand in their own right? So that's kind of my 2 cents on that. We'll see, though. Alrighty, next one up here. Fed Pal. This has market implications here.
Waters and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward these objectives over the past year. While inflation remains above the FOMC's objective of 2%, it has eased substantially, and the slowing in inflation has occurred without a significant increase in unemployment. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals have been moving into better balance. Even so, the committee remains highly attentive to inflation risks and is acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. The FOMC is strongly committed to returning inflation to its 2% objective. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. Economic activity expanded at a strong pace over the past year. For 2023 as a whole, gross domestic product increased 3.1%, bolstered by solid consumer demand and improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains relatively tight, but supply and demand conditions have continued to come into better balance. Since the middle of last year.
Which is good and bad. So it's good in terms of wage inflation, right? But the one thing I will say is could get scary, and this is more 6 months, 12 months down the road, is if you look at job openings, the number has definitely been plummeting. Now, one of the reasons we haven't seen massive unemployment in this Fed hike cycle yet, right, is because we went into this Fed hike cycle with not just a record, but by far and away a record amount of job openings. And so as people maybe lost jobs in certain other industries, right, they've been able to find jobs in other industries. Now, the scarier thing is if job openings continues to, let's call it, decline and decline month after month for the next, let's say 6 to 9 months, then at some point in time, when people start to lose jobs in the future, let's say a year from now, they're not going to be able to find another job right away like they could over the past few years, right? Which could lead to, potentially unemployment starting to go up and up and up, and then it kind of had the dominoes start falling the wrong way. So it's something that's definitely worth keeping an eye on, a very close eye on over this next year is job openings. Okay, it's the whole reason we haven't had the big unemployment cycle yet. But if that number keeps going lower and lower, then we're going to have a problem, because then when people lose the job for whatever reason, that company goes under, it's just not going to be nearly as easy to find the next job there, right? Or if you can find a job, it's like pays dramatically less than whatever your old job was. So just a little food for thought regards to that.
Payroll job gains have averaged 239,000 jobs per month, and the unemployment rate has remained near historical lows at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers, particularly among individuals aged 25 to 54, and a continued strong pace of immigration. Job vacancies have declined and nominal wage growth has been easing. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. The strong labor
Which is good and bad. It's bad because that means you're still going to be some wage pressure, right? Which could also be looked at as good because you want people to make more money, but then you talk about wage price spiral, that whole situation. But it's also good because that means we're still in a place that if somebody goes and loses their job for whatever reason or a company goes under, that they can go find another job. There's another opportunity out there.
For the past 2 years has also helped to narrow long-standing disparities in employment and earnings across demographic groups.
I know not everybody here, might have went through the great financial crisis, but as somebody who was entering the workforce in the great financial crisis, it was brutal to get a job. And not only was it brutal to get a job, I was happy to just get jobs that paid above minimum wage. Like I was thrilled back in 08, 09. But not only that, you also had, I mean, a lot of my assistant managers at Walgreens were college graduates that were assistant managers at Walgreens making $35,000 a year. And that was the best available job to them back in 08, 09, into the beginning of 2010. It was a very tough jobs market. So, when you're talking about college graduates that went to business school and, are working as assistant managers making $35,000 a year, which nowadays it might be $45,000 or $50,000 a year, you're in a really bad job market at that particular time. And so, just to understand the levels of how bad things were at that particular time. Like people with college degrees with $40,000 and $60,000 in student loan debt were happy to make $35K as an assistant manager at Walgreens. Man, that was tough times.
Inflation has eased notably over the past year, but remains above the FOMC's longer-run goal of 2%. Total personal consumption expenditures prices rose 2.4% over the 12 months ending in January. Excluding the volatile food and energy categories, core PCE prices rose 2.8%, a notable slowing from 2022 that was widespread across both goods and services prices. Long-term inflation expectations appear to have remained well anchored, as reflected by a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. After significantly tightening the stance of monetary policy since early 2022, the FOMC has maintained the target range for the federal funds rate at 5.25% to 5.5% since its meeting last July. We've also continued to shrink our balance sheet at a brisk pace and in a predictable manner. A restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economic outlook is uncertain, and ongoing progress toward our 2% objective.
So he made sure not to signal at a specific time this year. He's just saying at some point this year, right? Which I think is a very important statement to not try to signal, soon or in the next few months or in the first half of the year or second half. He just left it open. Very intelligent decision by Jerome Powell there, in my personal opinion.
For inflation is not assured. Reducing policy restraint too soon or too much could result in a reversal of progress we've seen in inflation and ultimately require even tighter policy to get inflation back to 2%.
Yeah.
At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment.
Which is better it's a better outcome, actually. It's the better outcome of the two. The worst thing you want to do is start loosening up rates. Inflation comes back, you got to come back in like the 1970s, start raising rates again into a much weaker economy where the jobs market is not nearly as strong and robust in terms of job demand. That's when all of a sudden you get a big unemployment cycle that hits hard, and that's brutal. So,
Adjustments to the target range for the policy rate. We will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-run inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
So, when's the Fed going to lower rates? If you had to put me on there, when's the Fed start cutting rates? My opinion is the Fed starts cutting rates sometime between May and July. That's my personal opinion. Sometime between May and July, the Fed starts lowering rates. Now, keep in mind, they're likely only going to lower like 25 basis points at first. It is almost irrelevant. It's just about the signaling of like, we're starting to lower rates, right? We're starting to lower rates. So that is what it is. It's also not always the best sign when the rate cut cycle starts. You know, a lot of people are really excited about when that actually is going to come, whether it's May, June, July, August, September, whenever the first time. And, you know, I don't know. I'm going to get more nervous when the Fed actually, that day, the Fed actually cuts rates is a day that I get a little more nervous, actually, rather than excited. Versus a lot of people are all getting really excited about that. I get a little more nervous because a lot of times when the Fed starts cutting rates, it means bad things will be coming down the pipe for the economy. And so that's why I've been in no rush, as I've told you guys many times, for the Fed to start lowering rates. In my personal opinion, I think it's usually a bad omen. So I don't know, man. We'll see. We'll see how it all transpires and works out. But yeah, that is what it is, okay? Appreciate y'all joining me as always. Thank you so much for being here. Make sure you get my free new workshop down there. That's pinned comment, how much money you need to retire, quit your job, focus on investing full time, all that good stuff. Much love and have a great day.